All right, good morning, guys. So Chris here, and this is the first in-depth video for our guide series. This one is the most important video that you will have. You really need to pay attention. Make sure you fully understand all these concepts. This one and the next one really establish the foundation to make sure that you're able to handle these market conditions. As you guys are aware, crypto moves very violently. You will have a lot of people make a lot of money, and you will have a lot of people lose a lot of money. Okay, both sides, absolutely. These two videos will be the ones who make sure you are in that first category to where you make more money than you lose. So let's establish the ground rules for our group. Okay, if you go over here to our group, if I can find the dang thing. There it is. Okay. You go over here to the, I don't know how to use this yet, about, here we go. This is not Wall Street bets. It's very important. So risk management is a very important tool, and YOLO bets are not encouraged. You will be removed for encouraging or making these sort of bets. This is a very important rule, and I'm having it here for a very good reason. Because what I'm going to show you is a way to consistently and systematically make money using logic and discipline. Let me say that again. You will consistently and systematically make money using logic and discipline. If you go on there and take out a second mortgage to buy GME, you're an idiot. Okay? Could you win a lot of money? Yes. Could you lose a lot of money? Probably a much higher probability of yes. Okay? If you follow these steps, you will make money consistently over time. But you have to be disciplined and use logic and rationale while you do this. So when you're trading is a game of probability and confidence. Okay, so you are basically making bets using the probability of something happen and your confidence level of it happening. So the reason why I'm going to give you guys so many indicators is so you have more and more ways to establish that confidence and increase your probability of the trade actually happening. And we'll go over that later. It's called confluence. The higher confluence you have for a trade, the more likely it is to actually play out. That's why I'm going to go over all 10 of my ones that I use. And that's what I do before I go into a position. And it establishes me a confidence level if a lot of these positions are playing out, or a lot of these indicators are telling me it's going one direction. So let's go over a long and short position. I'm gonna establish a little scenario real quick. So it goes up, down, up, and now we're right here. Okay, could go down here further, could go up. We'll go over this very soon, but this is called a change in market structure. High, low, higher, high, and we're trying to establish a lower high or a lower or higher low. So once we establish that, we now have a change in market structure. This is a tradable play just because of this one indicator. Okay, you'll really learn this later, but just understand this is something that we'll be going over. So we decided to go into a long position. Okay, what that means is that we're going to buy a position. So on our long position, we have a few different numbers. Up here, we have our profit, like our take profit level. And down here, we have our stop loss. Stop loss means as soon as it hits this number, it will sell all your position, whatever you have set on the stop loss. Okay. And up here means whenever you hit this level, you will take the money or you will sell your position. So you take that profit. All right. So you cannot lose any more than here, and you will not win any more than here. Right. Now, this number over here is the risk to reward ratio. What this means is that you have the chance of winning 3.32 times as much as losing. So if you increase your targets, that number will keep going up. If you decrease your targets, that number keeps going down. If you make your stop loss really loose, that number continues to go down. Okay, so it's a movable metric where you can adjust your stop loss. So what we're going to do is I'm going to say that this low right here is my invalidation point. So I'm going to put my stop loss right there. And then my target, I'm going to put it right here. Let's say that's a good spot I think is reasonable to achieve. So let's see right there, 3. Okay, this is my target. I can't go any higher than this because I've already established due to my technical analysis that this is my high point. It won't go higher than this level right here. This is where I'm confident that the price can make it to if my position does play out the way I want it to, okay? So I'm going to mark this level off real quick so there's no confusion on this. This is my level. It will not go higher than that. Or I don't have any confidence. I can't build my confidence to make it go higher. This is what I believe it can get to with the indicators. So now, what can I do? So like I was saying, 3, you have, right now we have a 3-to-1 ratio. That means that you can make 3 times as much as you lose. Think of it this way. If I take this trade 3 times, I can win 1 of them and lose 3 of them, and I'm still break even. Okay, that means I can lose 66% of the time and still come out even. If I only win 50% of the time with this trade, I will make money. Okay, this is very important to understand. If you are disciplined on this and have a proper R to R ratio, you will make money consistently, even if you're wrong most of the time. That seems like a crazy concept, but I promise you it works. All right, so how are some ways that we can increase our R to R? Let's say that you only want to do 4R trades, which is very possible, and there's nothing wrong with that necessarily. We cannot adjust this high side target. It's not possible, okay? The only things that we can do to increase our R to R is to either change our stop loss to where, let's say we're actually going to move our stop loss up to like here. There you go. We have our new 4-to-1 ratio. Another thing you can do, let's drop back down here to 3. Close enough. You can also wait until this price drops a little further. So let's say you actually get in the position down here. Look at that. So instead of buying right there, you wait a little longer and got a better entry. If you get a really good entry, look at that, 6% or 6R or 7R, right? The longer you wait, the more possibility of it making money and the stop loss being a lot closer. That means you can essentially, if this is at 7 exactly, that means you could take this trade 7 times, you could lose 6 of them and win the 7th and still come out even. It's a really, really, really powerful tool. So I hope that understands what R to R means, what position sizes, or not position sizes, but what these targets mean, what the stop loss means, and how important it is to maneuver this. Now, a general rule of thumb is you will never take a trade with less than 2-to-1 risk to reward. You just don't do it because it doesn't make sense, because then you're only 50-50. We don't like 50-50. We like being ahead. We like coming out ahead. So let's say you were to wait until this thing bounced and it came back up here, hypothetically, okay? The stop loss, you could try to move it up here, but let's say the stop loss remained the same, okay? If it got to this point, your R to R is only 1.9. That's below our 2-to-1 ratio, right? This is your entry position. If you can only get entered at this level and still target the same level, because you can't change your targets, you can only change your stop loss and your entry position. This is no longer a good trade because it's below that 2-to-1 ratio. Personally, I like 4-to-1 or 8-to-1 ratios because that means I can lose a lot and still make a lot of money. Okay, so losing's not a bad thing as long as you're disciplined with it. So the only thing you can do to change this is wait until it drops further. Oops, didn't do it right. Wait till it drops further and get that 2-to-1. Again, move your stop loss up because for some reason you think this is now a good support level, right? Or you have to adjust these two numbers. But again, we cannot change this position. We can't do it. It doesn't make any sense to us. All right. Now, whenever you come into this trade, you're going to have reasons for entering your trades, whatever they may be. Okay, it's going to be some sort of a combination of indicators, things telling you that the trade is a good idea. Whenever you no longer have met that criteria and you're still in that trade, you're not doing it because the patterns are telling you to or the indicators are telling you to. You're doing it because you hope it will continue to go up. Hope is not a trading style. When you're just hoping then you are just gambling. You might as well go to the casino and throw money on red or black. Okay, we are not gamblers, we are traders. There's a huge difference on this. So as soon as your condition for entering a trade becomes invalid, you need to get out of that trade. And that's why we have a stop loss in place. You establish your stop loss based upon, if I hit this level, my trade no longer makes sense, and then I'm hoping. So as soon as you hit that stop loss, you need to get out of that trade, whatever it may be. And that also ensures that your actual R to R stays consistent and you're actually taking those losses, because taking losses is not a bad thing. Holding on to losses as they continue dropping further is a really bad thing, and that's how traders really get burned. Okay, you need to cut your losses early. And the next part is called let your winners run. So cut your losses early, let your winners run. Okay, what this means is that once we have gotten a position to where, let's say this happens, okay? Let's say this price action, we take this position right here, and now the price comes back up here, and now it's come back down for a retest, and it's starting to go back up. What we can do is we're still in this trade. This trade is 100% still valid. We can actually come back in here and then make our stop loss break even. Okay, this stop loss no longer exists, or the stop loss is now our entry point, and our entry point becomes our stop loss. So what risk do we have on this trade? None. We have zero risk whatsoever anymore, because we've already, the absolute most we can lose is hitting this level again where we entered, and we go ahead and sell again, right? So you have an infinite R to R, and that means you can literally just let this thing ride until it wants to go up indefinitely, right? And what I would do at this point is I would still take my target right here, right? So I would come up here when it does get to this level, I would still take some profit, probably like, depending upon the trade, I may take 50% profit or 75% profit or 25%, whatever you think makes sense at the time. And the rest of that, and the rest of those targets, you can do an extended target. And what that means, you go way up here and you have another level. I know it's a shot in the dark, but you're like, hey, I like this level too, right? Because of whatever reason. Or you may go up there and find another target up here. So now you're taking, let's say you took out 50% there, you may be looking for 25% here, and then the last 25% there. Okay? So instead of becoming a 3-to-1 R, it's actually more of like a 17 R on this position. All right? That's a way that you can use moving your stop losses up to make it to where you don't have any risk anymore, and you can extend out your position. Like we saw with Doge, and like we've seen with other cryptocurrencies, these things like to really, really, really run. Okay, like seriously run. It's incredible. So a lot of these positions or a lot of these prices that we'll get to will grossly go past anything that you can imagine as reasonable. So generally, I like to make my stop loss, or as soon as I get off my position and I do have this change in market structure, I like to move my stop loss up and take out little pieces on the way up and just let it ride. Who knows where we're going to get to? Because it's crypto. It's awesome, right? And it's all risk-free, because even if it does come back down here, and let's say the whole thing crashes and burns, I've taken my profit at each one of these levels, so I did make money here. I made money here. I made money here. And then when I got down here and I did have to do a stop loss, I still did not lose money because I still have my entry position. And if you want to give it more so, once you do reclaim these levels and this does become a strong support, you can then move this up here and make your stop loss here and even make it to where you will make even more money. All right. The point is that this tool is very, very important, and you really need to be utilizing it. So, let's see what else. I think that really goes over everything I want to go over in this video. My next one's going to be over avoiding FOMO. But really, really, really dive in and understand risk management, guys. There's actually this Investopedia site right here that really is really nice about it. Investopedia, and it goes over calculating risk reward. I was going over it trying to make sure I knew all my information going into this, and it really went into a lot of detail. And I like what it's saying here. It really does help you understand it. And of course, you should also go on YouTube and look around and see what else you can find regarding risk reward and risk management as a whole, because this is an extremely important concept you really do have to understand. If any of the other videos you're like, whatever, I'm going to skip through it, great, I'm cool with that. But this one you absolutely must, and the next one you absolutely must. All right, I will see you in the next one, which will go over the FOMO, avoiding FOMO. All right, see you next one, guys.